Okay, excellent. So, welcome to the Seattle Real Estate Podcast. I'm Dan Edwards, your host. I am here with my good friend Tucker Maxwell with Guild Mortgage. Welcome, Tucker.
Hey, thanks, Dan. How you doing?
I'm doing good. It's a little weird because I get this delay in my audio. So, if I seem confused, more confused than normal, don't worry about it.
Okay.
How'd you do with Snowmageddon last week?
Hey, we survived. It was actually welcome. We didn't get really enough to make it. I still made it into the office every day. So it was just a nice, made things pretty. I haven't had a Super Bowl party with snow on the ground before, so that was fun.
Yeah, it's fantastic. And hey, all of those watching on Instagram, if you have any questions, feel free to type away. We'd be happy to answer them. Today's topic, we're going to kind of go over the housing market for 2025, January. We're going to kind of review the numbers. And I think I'm going to have to do it old school. I'm going to like literally flip my phone around so you can see the numbers. Okay. So, and then on here, I'm going to grab this screen here just a bit. There we go. All right. And we want to start with King County. So let's take a look at this and let me see. Tell me if you can see this screen. Okay, Tucker?
Yep.
Okay, cool. So King County breakouts for 2025, total active listings. Check this out. It's up 62.54% active listings from January of 2024. We're up 5.29% in pending, so similar amount of activity as the year before, and then 14.33% more sold listings in January 2025 to January of 2024, and our median home price is hanging out at about 800,000. That's up 5 percentage points over the previous year. And the one thing I want to really show you there is that months of inventory. It's 2.54, and actually that is like the highest number I have seen. Probably, I want to say close to 5 years. What do you make of those numbers as you look at that, Tucker?
Yeah, I was going to say, I think that takes us back to 2019, maybe even before then, for that much inventory. It's not too surprising to me based on what we're seeing on the application side of things. We've definitely seen that the spring market picked up pretty quickly after the new year.
Yeah, and that increase of inventory, I think, is actually a cumulative effect. Like when I look at it as not just it went from January to January. You said January, February, March, April, May, June, July, August, through the whole year. And now we've built up this level. And now that level is the new norm.
Mm-hmm.
But do you hear of your buyers out there getting outbid for homes right now?
Oh, absolutely. Yeah, we were in multiple offer situations across the board. I mean, I saw one buyer made an offer, home listed at 800,000 and went for over 900, and they got 19 offers.
Yeah, that's crazy. That is, I'm hearing that right now across the board in most King County areas and some Snohomish County areas. So let's go look at the east side. East side, 84% increase of new listings. That's almost 100% increase, right? 80% increase, 84. Pending listings up 4.96 and sold listings up 23.16. And I always say that sold listing is activity that happened in December, right? Yeah. So that's mostly early December stuff that closed in the new year or mid, but mostly it will be the first 2, maybe 3 weeks that close in January. And our median home price across the east side is 1.2 million with a 6.28%. And our months of inventory is 2.39. Again, one of the highest numbers. Yeah. And I would say since the fall of 2018. Mm-hmm. It's weird because it's deceptive. I know that it seems like it's high, but that months of inventory is based on low activity, right? Because what they're doing is predicting the pendings and solds. But when we get to the mortgage moment, we'll talk a little bit about where rates are and mortgage applications. We'll talk about that. But let's just cover the hottest county, and that's King County. King County is up 96% in inventory. Pending listings, 1.34. Sold listings down. So actually, we had less activity in Snohomish County, but right now they're getting busy and getting after it. And take a look at that median home price, $748,752 with a 6.96% appreciation year over year. And we're still down at 1.69 months of inventory with that increase of inventory. So it's going to be interesting to watch the months of inventory to see where they go. But that's pretty. So overall, what do you think of these numbers?
Well, I like the ability to buy in Snohomish and other counties that the value, the east side purchase price, 1.2 million. I'm wondering, where does that ever stop?
Yeah, I agree, and I would say that's a great question. Is
Yeah,
where it stops is when a lot more inventory shows up.
right. Exactly. And so, but it looks to be, price per square footage, you're going to get more bang for your buck in Snohomish County.
Yeah. So then, as we talk through what buyers should expect and what sellers should expect, I really do believe buyers need to expect to compete and be flexible. They're going to have to continue with that. I think that sellers, as much as it would be great to just say, "Hey, don't worry about it. Just throw the home on the market." We see the homes that are getting the most offers are the ones that are well maintained and or recently updated. There's a little bit of resistance still, and it's because the market conditions. But I think as most of the people right now have decided that this is the new normal for interest rates, and we need to get rolling on stuff. So, any other final thoughts on that?
No, I would completely agree. You got to work with your lender to have a strategy before the home comes on the market.
Yeah, I would totally agree. Okay, well, that is your Real Talk segment, which I totally forgot the little bumper for that, but we'll go on. Let's do this. Let's jump into, let's see, where is your mortgage? I know we have a mortgage moment, little intro, maybe not. Oh, here it is. Okay, here it is. I'm going to flip my camera around so everybody else can see it.
Here we go.
Because it's kind of cool. Yeah, that sounded pretty cheesy, didn't it? I mean, it sounded kind of tinny. So,
Yeah.
all right, let's go. Look at my desk. All right, so let's get into a discussion on what's going on with the mortgage market, bonds, inflation, all that stuff. Talk to me about that.
Yeah, so this was a big week for inflation data. We got the CPI and the PPI data, which both showed that inflation is actually trending up, which is not the direction we had hoped for, with the hopes that interest rates will come down. So it's been interesting. We had some good news early in the week, which had interest rates for home loans rally and come down a bit. And it was really good news. And then in the latter part of the week, we had CPI and PPI come out showing just slight increases, but that the trend of it going down, changing to going up. And so we have seen interest rates kind of bounce back up a little bit. We were, again, we don't necessarily like to, but for the week of February 13th, we started out at the week a little bit below 7, and we're going to end the week a little bit above 7. So not major volatility, but we are seeing an upward pressure on interest rates.
Is there anything in the near future that might put downward pressure on rates?
Well, I'd like to say that the Fed has, some idea around that, or some desire to lower rates, but I don't think that's going to move. It's going to be jobs report. If we can see that the jobs market is continuing to contract, slow down, wage growth slow down, some of that may help. But with most of the eyes on inflation, until that switches course and starts to come back down, we could be seeing rates kind of trend, I would say, flat or up for the next 3 to 6 months.
Okay. So most buyers need to just kind of proceed forward, find an opportunity, take advantage of maybe some seller credits in order to buy down the rate for a couple of years. Any other tips or advice?
Yeah, I think, we mentioned the competitiveness of the market, so that could be difficult, but, explore lender paid buy down options. A lot of lenders will offer a 1-year buy down to help hopefully make that first year payment somewhat comfortable, to either give us more time to get you into a refinance, or allow your wages to increase, or, recoup the amount that you put in for down payment, so you just feel more comfortable. But potentially explore, if you are looking for seller credits, we may need to get strategic in going over list price to roll those in, so that the seller's still netting the proceeds that they're expecting if there's other competition.
I love that. All right. Well, now let's switch to our topic. We talked about renting purchasing investment properties, and the DSCR loan.
Yeah.
Okay, so I've got a scenario for you. Actually, I just got into contract on a rental property, and we didn't talk about this beforehand, so there's nothing prepared. But this is a property that I'm going to develop. I'm going to hopefully put on the back a couple of dadus. That's a big deal. But the house itself is pretty simple. But I believe I can rent upstairs, and I believe I can rent downstairs. My purchase price is $550,000.
Okay.
What do I need to qualify for this home with a DSCR loan?
Yeah, so DSR, to give everybody what that stands for, is debt service coverage ratio. So the entire concept of this loan is we're not going to qualify, Dan, you off of your income. So we're not collecting tax returns and pay stubs and things like that. We're simply determining, are the proposed rents that this property is going to bring in? So how much is that top unit going to rent for, and how much is that bottom portion going to rent for, as estimated by an appraiser? So not, our friend down the street that's going to, write a nice lease for us, but we're going to have an appraiser come out and say, okay, what are the common rents in the area for this size unit? And as long as those rents are greater than the proposed mortgage payment, we qualify. And so back to your question about what it takes to qualify, is the down payment is somewhat dependent on getting that mortgage payment below the rents being generated.
Okay, so let's say the upper unit rents for $2,000, the lower unit rents for $1,000. Let's just say that's what the appraiser comes up at.
Okay, so that's a total of $3,000 a month in rents.
Yep.
So we need to get the mortgage payment below that. So if I take I'm on my phone.
You're on your phone.
Yeah. Give me a second here, and I will do some quick math for us.
He's got to use the computer instead of his phone.
That's right.
No pressure.
We work on the go, so we're good. Okay, so we're going to assume, Dan, you have an 800 credit score. We're going to assume debt to income ratio is super low. You don't have a whole lot of bills, but this is a DSCR loan, and it's covering at 95%. So just a little bit there of cash flow, but not a ton. This is in King County.
Snohomish County.
Okay. Do you want to discuss prepayment penalty, or should we say no to prepayment penalty?
No to prepayment penalty.
Okie dokie.
This is riveting, I'm sure, for everybody watching. It's like in real time.
We
can ask questions if you have a question related to the housing market while he's calculating this, but it probably won't take him but a few seconds.
Yep.
What are you doing for fun this weekend? Hey, anybody watching, do you have any big plans? It looks like it's going to start to snow here. Would love to hear what questions you have about. Well, one of the things that is a challenge is cash flow properties in the greater Seattle area. But this one has some serious upside, and I'm excited about it.
Yeah, and are you going to potentially use the pre-approved plans for the DADU construction? You want to talk kind of what the value is there? Yeah,
so right now, Everett, this property's in Everett, has adopted a pretty good plan. I believe it's 35 feet, and then it's 45% pervious surface. However, I believe this property's already got more than that covered, so I don't know that we have to worry about like subtracting coverage, meaning there's a big garage on the property already. We'll probably tear that down and then build the dadus in the back there. And those streamlined plans actually are all ready to go. So the permit process, what I'm being told is it'll be about 18 months to get these two things built.
Yeah, for totally finished. Okay, so for the math, so I initially assumed a 30% down payment, just as a kind of a ballpark. So $550 purchase price, borrowing $385,000. The principal and interest payment at a 6.99% rate is $34.58. So based on that, $34.58, it doesn't cover it 100%, right? We're $458 shy of covering the mortgage. Some DSCR programs would let you do it, would be okay with that. But you're going to pay a little bit higher interest rate. You might pay some more fees, maybe have a prepayment penalty. But if we want to get to a full coverage of that mortgage payment, we're going to have to put more than 30% down or buy down the rate, do some combination thereof to get there. So right now, it depends on the program, but you're going to need probably 30% down or more.
So our DSCR loans, generally a higher rate? Like if, let's just say I have the capital, so I'm going to go ahead and I'm going to bring 40% down. Are they a same interest rate as everything else, or are they a higher interest rate?
I would say they're a slight premium, a little more riskier. We're not looking at your income, so we're just purely basing it off of you having tenants in there and it being able to cash flow. But right now, there's not a big variance between like these, we call them non-qualified mortgages and our qualified mortgages. So where you could buy this as an investment property, like just a traditional conventional investment property, one, we would have to be able to verify your income. So you'd have to qualify on income outside of the rents being generated, but it might save you 1/4 to 0.5% in rate if you went that route. The major advantage of DSCR loans are for folks that we don't want to look at the tax returns. We don't want to even have that be brought into the equation. And so it's just purely based on the cash flow of the property itself.
Yeah, it's pretty well. I think that's a good loan to do anyways, because you want to really have cash flow in your properties. You don't want them negative. But if you don't have the down payment, the alternative is just you're paying more money on that mortgage. So it's, I don't know, raise the rent, maybe get a higher amount of rent.
Yeah. And the other thing is, you potentially look at refinance once those DADUs are built, and we can bring in those rents. And now you have significant cash flow, because unless you really borrowed a lot to build it. But yeah, to start, you're potentially underwater a little bit.
Hey, I've got a great question here from C Pruitt _insurance. If you were a first-time home buyer, what area would you recommend looking into as a potential investment down the line? That's a great question, and I'll answer that. Number one, cash flow is going to be better on the outskirts, so north or south, so Pierce or Snohomish County. And then also look for where the light rail is going to be. So as a first-time home buyer, it may be a better deal right now. So all along the rail lines in Seattle, south of Seattle, Tukwila, White Center, and then eventually will be a good rental place. And that's a great hack. So thanks for the question.
Yeah. The other thing for first-time home buyers that I always tell or advise them to explore is duplexes, opportunities like this, a detached garage. Like, can we buy something that has the ability to rent out a portion of it or something? That's a great hack for first-time home buyers, especially if the payment, we talked about how do we get that payment down, like rates are up. Can you buy a 3-bedroom and rent out a room to your buddy to make it more comfortable now? But there's a lot of opportunities for first-time home buyers across the greater Seattle area.
Yeah, one thing I didn't even think about in this property is the garage, renting the garage out.
Yeah.
I mean, that could be like a 6 or 8 month rental, before we tear it down.
Yep.
All right. So anything else to add on the DS? Anything else we should know about these loans?
Not necessarily with DSCR loans, but another applicable use of that loan is for folks with ITIN. So folks that don't have a social security number, ITIN is a great loan program that we can use. We can use a DSCR loan to put somebody into these programs without a social security number. So if you have a valid ITIN number, reach out to us, because there are solutions like this DSCR loan that we're not looking at taxes and W-2s and things like that and seeing the inconsistency in these numbers, because none of those are reviewed. So it's just basically purely based on the cash flow. And so it's a good option for those folks.
Cool. All right, Tucker. I think that's all we got for our podcast today. What are you doing this weekend?
I'm headed to Bend, Oregon.
Oh, cool.
So we're going to go ski at Bachelor, go to drink some really great craft brews. I think it is like the craft brewery capital of the Northwest, even though I think Ballard would probably argue that, or the Seattle area would argue that. But going to Bend, it's going to be freezing cold, but looking forward to it.
That's awesome. Well, do they have new snow out there?
Earlier in the week. It's been sunny the last couple of days, but we're hoping to get a few more inches before we get there.
So I am showing homes this weekend with clients, and then on Monday heading to Las Vegas for Keller Williams family reunion. So I'm going to spend the week out in Vegas, and I probably will gamble this many times.
Okay, we won't hold you to that.
Yeah, no, I'm not interested.
We'll have you report back your wins and losses.
Yeah, but hey, maybe I'll do a podcast from there next week. Okay.
All
hey,
right.
Thanks a lot. Okay, let me flip my camera around so I can show the outro now. I'm going to go like this. And thank you all for watching.